Hi everybody, and a very warm welcome. Just move that down out of the way. There we go. Let's start with the usual risk warning, which I'm sure you know. I'm sure you've seen many times before. Trading can be a very risky business, so please don't use money that you cannot afford to lose. So there we go. That's the formalities out of the way. Just drop that out of the way. It's been a great day on the markets today. First day back after the 4th of July holiday. And certainly seen some impressive moves in terms of dollar and also some great moves in terms of index futures as well. But I just wanted to concentrate on Tesla. I've got Tesla Workspace up here. I've got three faster time frames. I've got the 1 minute, the 2 minute across the top there, and the 3 minute down the bottom there. Always something to trade intraday if you're a day trader on Tesla. But the chart I actually wanted to concentrate on was this one at the bottom right, which is the weekly chart for Tesla. A lot of people are wondering where Tesla's going in the medium to longer term, and it's come off well off the highs, and we had this price waterfall lower coming down to the volume point of control. And the indicators I want to really focus on is twofold, and they really work in tandem together, particularly when you get these congestion areas forming. So the first part of the equation, if you like, is the yellow dashed line, which is the VPOC, which is the fulcrum of the market in terms of volume. It denotes the heaviest concentration of volume. You can see it out here. And certainly what it told us when Tesla was breaking down from 1,000, 1,100s, come all the way back down to, just move that out the way, back down to the VPOC, which is just below $700 at 696. And at that point, at the very least, in this waterfall, you would have been expecting the market to congest, because that's what you expect when price is approaching a very high volume on the VPOC histogram, which is the shaded area behind. Then when it comes down to the VPOC itself, which is the heaviest area of volume, you expect the price action to, at the very least, congest for some considerable time, which is what it's been doing for a long time now, which is why you've got this heavy volume. So that's the reason it's occurring. That's what we're seeing. We're seeing the, you can think of it as a seesaw, if you like, with the VPOC as being the fulcrum. And what we've got at the moment, we've got equal weight of bears and bulls on either side. So the seesaw, if you like, is equally balanced. There is no bias at the moment, or no insufficient bias at any rate, to drive the market one way or the other, to drive it into a bullish trend higher or a bearish trend lower. So for the time being, it's a question of being patient. Now, the next question, of course, is, well, what are the technical levels? And they are described for us instantly with the accumulation distribution indicator. And that's what these blue levels are here at the top and bottom. And we've also got another level of red in here. And what the accumulation distribution indicator does is it defines these levels visually, pictorially, and it tells us instantly where we've got very strong levels of either support or resistance, or where we've got less strong levels. For example, this level here was relatively minor. You can see there the little ×2, which means that that level was only tested twice. In other words, not particularly strong. These levels here were even less strong. They'd only been tested once and held. So they were less strong. This was slightly stronger. You can see it's slightly thicker. But these levels here around the fulcrum of the market here, the ceiling and the floor of resistance and support are very strong indeed. You can see just by the thickness of the line, and that's what the indicator does. It actually thickens the line. Each time a level is tested and holds, it thickens it accordingly. So what you get, particularly around the VPOC area, as we are here, and this could be on a minute chart, could be a weekly chart, could be an hourly chart, it doesn't matter. This works in exactly the same way. What you then get is these very clearly defined areas which give you a perspective and a very clear view on any breakout from this congestion phase. As I say, this could be a 5-minute chart, for example. You could be a day trader looking at this, you're in congestion, you're waiting for a breakout, but you're not sure of the levels. That's what the indicator does. It builds these floors of ceiling, of resistance and support, and works in association with the VPOC when you're trading in these congestion areas. So what we're waiting for in terms of Tesla So we're waiting for a breakout. If we're going to get a breakout to the upside, then certainly this level at 800 is absolutely key. You can see how often it's been tested. A very strong level here in terms of resistance. Equally to the downside, we've got this very strong platform of support over here, which is actually way over here back in February, April, May. So this is also equally strong. Now, if either one of these is breached, then that will then give a very clear signal, provided, of course, it's associated with strong volume and good solid price action breaking away from that region, that this is then a breakout from the congestion phase. If we see a breakout to the downside below 600, what have we got in the way? Well, not a lot, to be honest, because the volume here falls away dramatically into a low volume node at 550. So there's very little in the way of volume which can act as support. Now remember, volume can work in the same way as price does in terms of support and resistance. We're all familiar with support and resistance from a price-based perspective, but volume works in the same way. So if you've got a strong concentration, high concentration of volume, it is going to act either as resistance or support, depending on which way you're approaching it. So here we've got a low volume node at 550. Now, obviously, what we would need to do to look at if the market does indeed break to the downside, we've got a low volume node. We need to go up to the monthly chart and see how the monthly chart was shaping up in terms of a further outlook into the future. But if it does break below that level, there's really very little below that. And we're all the way down to this price level at 450, which I'm sure a lot of people don't want to see. But that is the point, that if it breaks through this key platform of support here, then that really will signal a breakdown in price from move down to 450 with this platform of support, which again is on the accumulation distribution indicator. But again, that move would have to be supported with strong and rising volume, and you'd be looking at the daily charts as well as the weekly in that context. So I just wanted to highlight that in a real quick video in terms of Tesla. But never forget, this is a weekly chart. But as I say, this could be a 1-minute chart, could be a 5-minute chart, 15-minute, hourly, daily, whatever. The principles are exactly the same. When you get congestion around the VPOC on the VPOC histogram, then you will see these levels building above and below if you have the accumulation distribution indicator working in tandem with it, and they give you a very, very clear signal. They give you these wonderful channels of price action, which then give you such a clinical level in order to gauge when a breakout is underway, which of course will be confirmed with volume. Hope you've enjoyed that particular video. Thanks for watching. See you again soon, and bye for now.